what are your favorite markets and any markets you would stay away from right now?
So, I mean, that's a broad question. Depends on what, asset you're looking at. But right now in residential and housing, and you can go on realtor.com. They have tons of information on this. Obviously Arizona, Las Vegas, those are correcting right now the fastest. Those are under pressure. Residential market, somewhat multifamily too, but mostly residential. Austin, Texas is taking the biggest hits. And there's a couple other states that are really under pressure right now where values are dropping the most.
Thank you again for joining. If you want to give a little bit introduction, and then we'll just do a Q&A form if that's okay with you.
Yeah, awesome. Yeah, I've got about 50 minutes. So yeah,
Awesome.
so I'm a serial entrepreneur, real estate investor and developer. I've been at it full-time since 1997. Went in the Navy right out of high school. Did not go to college. Worked in restaurants and construction my entire career. So when I was working in restaurants, I always had a little construction side business. In 1997, I moved to the Outer Banks of North Carolina. I started a little remodeling handyman company from nothing, just me, myself, my tools. Did 250,000 in sales my first year. 7 years later, it was a $30 million building company. I was one of the largest builder developers here, building big beach houses like you see behind me there. And I started getting into land development. Well, my first thing was a lot flip, and I started building spec houses, and I started doing land development, subdivisions, commercial, and then just went from there. So I've built hundreds of homes, commercial buildings. I've flipped hundreds of houses. I've done wholesales on, houses, land, commercial, businesses, and then, full on, gut rehabs to taking them all the way down to the studs and literally taking houses that are all crooked and jacked and straightening them up and rebuilding them, just all kinds of really cool things. I've moved a ton of houses down here on the Outer Banks. We're in a flood prone area with hurricanes and stuff and, ocean overwash. So a big thing down here after a couple of hurricanes hit, for FEMA, Federal Emergency Management Association. I did a bunch of work for them and moved about 30 or 40 houses where we literally cut the foundations loose, picked them up, moved them, either raised them up, put new foundations underneath of them, or we would move them to other locations, pick them up, build stories underneath of them, things like that. So I've done all kinds of really cool things.
That's awesome. That's really, really impressive. Is there like one niche that you're primarily focusing on right now? Is there like one thing that you're doing more of right now than others?
Yeah, so I'm at a different stage now. That was 20, 30 years ago. So I'm 55 now. So I coach and mentor people all over the country and around the world doing, what I do, real estate investing and development. But for me, land is the biggest thing right now because there's such a short inventory of everything except office, basically. But in the housing sector, whether it's multifamily or residential, there's a shortage of units, as you all know. So my main focus over the last few years has been delivering lots to builders, taking land, breaking it up, things like that. So big projects is kind of what I focus on now, primarily land. And then, I'm also a serial entrepreneur. So I'm a co-founder in a tech startup. And, I've got a couple other companies that I'm on the board. So
Awesome.
That's the kind of stuff that keeps me busy these days.
All right, guys, if anybody has any question, feel free to unmute or put it in the chat, but I'm going to go ahead and start off with
and I forgot to say along the way, when I built that first company from 0 to 30 million in 7 years, I started 12 other companies along the way, mostly ancillary to the real estate and construction industry, service industry on the Outer Banks. I did have a cheerleading, trampoline, gymnastics program as well, and a couple of restaurants, but mostly like HVAC, pool, spas, landscaping, electrical, hurricane shutter company, painting company. So, whenever there was a need, I would go start a business to fill that need. That's kind of how I started. So I did that along the way during that first 7-year period as well, and just kind of exited everything and then reinvested all that cash into other assets and just kind of compounded that along the way. So right now I'm in wealth preservation and growth mode. That's kind of where I'm at. So I built up this big pile. So my whole philosophy now is keep growing that pile without losing it.
Yeah. So basically you haven't done much in your life, right? You just sit at the beach, just relax, right?
And that's just business. So then there's the philanthropic arm as well. And that's a whole nother story.
That's amazing.
I did all that. So just to
you raised people, from you went from 0 to 30 million in 7 years and started 12 other business. That's incredible.
Yeah, and so while I was doing all that, my kids were, preschool age when we moved here and started. So I was on the board of all of the different organizations around town, the Education Foundation, the softball. I had girls, so softball, Babe Ruth softball, the Parks and Rec, the Home Builders Association, chairman of the Remodeling Council, trustee at my church, taught Sunday school, did all of that all the way through, all at the same time. And I had all of the free time on my hands I wanted. I never missed any of the events my kids did, never missed any of their plays, birthdays, functions. I was home every night for dinner, had every weekend off, took about 4 or 5 weeks off a year. So all of that along the way. And
that's incredible.
As a serial entrepreneur, I'm a leader, delegator, motivator. So I'm all about, leadership, systems, streamlining your operations. And really my business philosophy is, how do you make the most amount of money in the least amount of time with the least amount of energy and effort possible without using your own money? So that's my business philosophy, and that's what I've done my whole career.
That's awesome. Super, super, super impressive, Greg. So I'm going to start off with a question. So you're doing mostly land development, like basically selling lots to big project lots to builders, right? So if somebody was starting out, let's say if I was starting out and I wanted to do that, how would I go about picking the best market to invest in? There's definitely, I'm moving to San Diego in about 4 months, and I can tell you, like, there's extreme shortage of houses. But let's say somebody, we have investors from all over the country, somebody starting out, how would they pick the right market? How would they know the market that they're investing in if it meets the criteria where there's a huge shortage of houses?
So that's it right there. You go where the demand is, where's there no inventory? Where are you not able to find deals if you're doing residential? Where is the path of growth? So generally in most areas, there's going to be an urban core, an urban center, a big city center, and then everything kind of develops out around that. So there's, there's the plays within that urban core where you can redo a property. I love to do that, adaptive reuse, take old buildings and repurpose them into residential or, mixed use or something else. That's what I really love to do. That's what I'm passionate about, where I started renovating buildings. But from land development, and even from that, it all starts with, what is the need? What is the demand? What are the demand drivers? Because that's going to tell you what the highest and best use is when you figure out, what kind of demand is there and what's driving that demand. Is there a sports stadium? Is there, education? Is there, industry? What are those things? And then you try to find land in the path of development, path of growth. And you want to get that land under contract, and then, start working your way through the entitlement process. While you're doing that, network with builders, the builders in the area that are building units. And so that way you already have your end buyer in place. So just like if you're, wholesaling, you want your end buyer in place so you know what they're looking for and you go shopping and find what they need. So that's the other way. So if you don't know any of what I'm talking about or how to do it, then what you do is you go talk to builders. So the builders that are building 10, 50, 100, thousands of homes a year, you go talk to them and you say, hey, where do you want to be? Where do you see the path of growth? What type of product are you looking for? Then you go shopping for them and you find parcels of land in areas that can be, if it needs to be rezoned, you get it rezoned, you get it entitled, then you can flip that to another developer or builder, or you go ahead and take it through the entitlement process. That takes time and money, but then it's worth more. And then you sell, either pieces of that or, the whole thing entitled, it'll be worth more money. Or then you go ahead and take it through, the horizontal construction, putting in the roads, utilities, all those things. And then you can sell lots or pieces or chunks. So there's multiple different plays, multiple different ways, to execute that business model. But it all goes back to demand. Why is building so hot right now? Because there's no inventory. So the best time to build is when there's no inventory for sale. And then generally that balance will flip. At least it did in the past, pre-2009. After 2009, the game changed because you can't get any help. So there's a huge labor gap to where we can't, as builders and developers, we can't deliver enough units fast enough to keep up. So right now there's going to be a huge demand for new construction for a long time, because we can't, even if I gave you all the lots in the world, you don't have enough labor to get them done. So that's a big issue right now.
So as far as figuring out where the demand, sorry, go ahead, Dash, did you have a question?
Well, yeah, so I was just going to ask Greg, I'm actually working on a few stuff like that now. We're basically just taking stuff through the entitlement process, but we're focusing more so on apartment complexes, and just kind of selling the blank pads to builders. Have you done anything with apartments, or are you solely focused on the subdivisions?
No. So all of it. So apartments, commercial, mixed use developments where you've got a grocery anchored center development, and then you have everything else around it that includes multifamily, townhouses, residential. So I'm talking, some of the stuff is like thousands of acres. Some of it's hundreds of acres, and some of it's like one pad like you're talking about. But multifamily is a huge demand, and builders will pay a premium for a fully entitled permit ready piece of land, because they're skipping, I don't know about your area, but my areas, it takes 2 years to get that done a lot of times.
Yeah, I'm actually in Raleigh. So I'm sure you maybe have never heard of them, but City Plat, we're doing a lot of we're doing a lot of land entitlement. We're not necessarily taking anything through the horizontal stage. We're kind of selling out at that point. But yeah, I mean, we're doing a lot of the multifamily stuff. So I just kind of wondered, your kind of experience on that.
Yeah, that's a great niche. A lot of people still looking for that. Raleigh's hot, Cary's hot, that whole Piedmont Triad area. I was just in Charlotte the other day, going through Charlotte, Greensboro, Raleigh, Durham area. And, that's still a very, very hot area, positive net migration. So, that's the key right there. You want an area where there's more people moving in than moving out. So that's where your growth is. So yeah, that's a fantastic play.
So you would look at like the net population growth in that area, and also like kind of following where the builders are developing. Like, and are you working with like the top builders, or you're working with local builders? How are you going about building your relationship with the end buyer? So I love the idea of like starting with the end in mind. Like, hey, this is what my buyers need, so I'm going to just go find that they're already looking for and sell them at a premium. How do you go about building that list of buyers?
Yeah, so it's networking, and just like Taj, was talking about. So you want to figure out, who the buyer is for that product. So, there's certain multifamily builders that won't touch something unless they can do at least, X amount of units, 200 units, 300 units, 400 units, whatever. And then they'll tell you how much they can pay per door for land. So, it might be $10,000 a door, it might be $25,000 a door, it might be $100,000 a door, depending on where it's at. So, that's the keys. Is they're going to tell you how much they can pay, just like home builders. They'll tell you how much they can pay for a finished lot based on what they're going to sell a house for. Then you work the numbers backwards to know where you can make your spread in between raw land, entitlement, improvements, and then finished lots. So wherever you sell along that route. So the key is, just like in residential, if you're flipping houses, you need to know, who the investor. So if you're signing, contracts and you're wholesaling, who are the investors in your market? What type of product are they doing? There's some people that focus on stuff under 200 or under 100, whatever it is in your market. I don't even know if you can get in under 100 anywhere anymore, but there's people that are going to be doing $200,000 stuff and under. There's people that are going to be doing 2 to 4. There's people going to be doing 4 to 8. People going to want nothing but multi-million-dollar stuff or $1 million and up. That was me down here. I wanted, all oceanfront land, multi-million-dollar projects. So you want to understand who the builder is, who the investor is that you're either wholesaling to or flipping to. What are they looking for? What's their criteria? And then you go shopping. So they'll tell you everything. So not only will they tell you, but you're going to learn from them. You're going to learn the business from them, because, like I was talking about with Taj, when you sit down with that multifamily builder, you'll learn the business. So ultimately one day you can be that guy, hiring him to build for you, and you're the developer. And, the way you learn is asking good questions. Why are you looking for land over here? What is it that attracts your attention here? How come you can pay $25,000 a door? How does that work? How do you, what do you do from ground up? How does it work? Where do you get your money? Who are your investors? Where do you get your debt? So you start asking those questions, and that's how I learned the business. So again, I started with absolutely nothing. I had no money, no training, no backers, no courses, none of that stuff. I started a little remodeling company. I started doing work for these guys that were buying beach houses, putting ground floors in them and pools, in the backyard, and it would increase the rental income by 50 grand a year. So I started asking them questions. Why are you doing this instead of that? How are you financing these? Where are you getting your down payments? All those types of things. And that's how I learned. And I said, man, I want to do what you're doing. And they were hiring me to work for them. And then eventually they said, well, look, you bring us a good deal. We'll bring the other components, you do all the work, and maybe we'll work something out. So, that's kind of how I got into business. So as you guys are on the front lines of deals, that's how you can work your way into deals. So you can assign that dirt, get your money for assigning the dirt, and still stay in the deal as a partner if it's a good enough piece of land. So you can have all your cake and eat it too if you position yourself right, ask the good questions, and then build those relationships.
Interesting. Oh, that's amazing. So you're almost like, when you're meeting the bidder, if I understand correctly, you're kind of like qualifying them, but also like trying to pick their brain on what they're doing that you could potentially do one day. I love that idea. I think that's fantastic.
Always be learning, always be asking deeper questions, and people will respect you by the questions you ask. They will know how much you know by the questions you ask.
I think that's incredible. Kathy has a question. How do you find the builder? Like, acquisition seems easy enough, but the dispos are a real problem now. So how do you go about finding the builders in the area? Like networking, like you're going to the local, meetups? Like, if you can just speak a little bit about that.
So number one, drive around and see who's building what where. So that's the best way. So you need to know your market. When I say know your market, I mean intimately know your market. You need to be an expert, to where you can quote me in your market, who's doing what, who's the builders, who's the developers, who's multifamily, commercial, residential, how many units are they building, what's the price points on those units, how many are they selling? Same thing with residential. How many houses are on the market? How many are under contract? How many have sold in the last 30, 60, 90 days? And how long were they on the market at all those stages? Who are the realtors that work with investors that, who's the top realtors? So the number one thing, if there's nothing else you take away from this today, you have to become an expert at your market, because real estate's hyper local. And once you understand the fundamentals of how to do that in your market, you can take it anywhere in the world. It works anywhere in the world. So you learn, like I said, state, city, neighborhood, subdivision, street, and location on that street. All of that matters down to that minute detailed level when it comes to real estate. And so you drive around and you see what's going on where, and you'll see who the builders are because their signs are on things. You look in the MLS, look in Zillow. For commercial, there's Crexi, there's LoopNet, and there's commercial brokers that all specialize. So you want to know who those people are on the commercial side, just like the brokers. There's some that specialize in construction on the residential side, new construction. There's some that specialize in resale at certain levels, those types of things. Network with brokers. There's also the Home Builders Association. So you can become an associate member there. Or you can, build relationships and attend as a guest with some builders and meet some builders. So those are the ways that you find the builders and learn, who's doing what in what area.
That's incredible. So now, once, let's say you found the end buyer, you've qualified them, you understand, what they're looking for. And you've done you have incredible experience. We've done everything from small single family houses deal to multi-million-dollar projects. Have you noticed anything as far as the acquisition side is concerned that works consistently, over years of experience that you have? What are you doing right now? And what have you noticed, over last few years that has consistently worked for you?
So it's relationships. So number one, it's building those relationships and becoming known for what it is you do. So deals come to me because in my region, in my markets, I'm a known entity. People know me, they know what I'm looking for, they know what I do. So those types of things just come to me. Like when I was, specializing in oceanfront property, anybody who had oceanfront property that wanted to sell, they knew that I was liquid, I was a buyer, so they would come to me. And, same thing with, what I do now. People just come to me. So, that's number one, is building those relationships. Number two, it's a system. So I farmed when I was building and developing, starting out, I farmed for vacant land, just like you do, for, motivated sellers. So, I was constantly marketing my market to all of the vacant land that I wanted. I identified where I wanted the properties and I mailed them constantly. And I'll tell you, I've had deals come back to me 2, 3, 5 years down the road where I sent somebody a postcard and they, I wanted to buy their land. And, they called me up and they said, I have your postcard. I put it in my drawer, and I'm ready to sell. And these are people that said, and I know you've all heard it if you're out there doing deals, I ain't selling to you or anybody else, no time in my life or your life or never. You always hear that, especially with land. And, people are really emotional about land more than houses. But the key is keep the same phone number, keep your CRM up to date. Contact your people constantly. It is a contact sport, right? It's a numbers game. And, never give up on a lead, never give up on, a deal. Stay with it, follow it up, follow through. If a deal fell through and it didn't go down, follow up on that, see what happened. So, you want that system so you can constantly stay in front of people. And then number three, make offers. You got to make offers. You will never get a deal that you don't ask for. So you got to be out there letting people know what you want and making offers.
I love that. I agree 100%. It's a cliche, but there is so much money in the follow-up, just constantly staying on somebody's radar. So I'm glad that you saying that. And then
I've had multi-million-dollar paydays walk into my office out of the blue when I talked to them years before and thought the deal was dead. I mean, it's amazing.
Right. And then you said you're sorry, go ahead.
No,
Somebody
go
has.
ahead. Yeah, you can go ahead, Shrant.
Yeah. So I was going to ask you, you said, you build a lot of the deals that you're getting now are from relationships. So is that relationship with the local agents, or can you speak a little bit more about that? Kind of what sort of relationships that you're building in your market that, you have people bringing in the deals to you?
So it's everything. So everybody you meet is a potential relationship for something down the road. So you always want to stay in touch with people, and you always want to continue to build relationships with everybody you meet everywhere you go. Number one, be a seeker of wisdom everywhere you go. Always seek to understand where the other person is coming from and how you can help them. How can I serve people? because that's what it's all about. It's all about serving people, solving problems, being there when somebody needs what it is that you have to offer that can help them sell their property, buy a property, get a deal done, take it through the entitlement state, whatever it is, that's what you're doing. So you're building relationships. So it's staying in touch with people. I mean, that's really what it boils down to. So, specifically, yes, it's all of the above. So it'll be realtors that deals will be coming from. It'll be, people that I know. One of my best deals came from a next door neighbor. I was buying a piece of land to build a house, and I needed another piece, because my wife picked out a big house plan. So I'm like, I need more land. So he had a lot in between his house and where I was building. So I approached him to buy half of the lot because that's all I needed. And he said, oh, hey, by the way, I've got this oceanfront hotel deal. You interested? So, I mean, you just never know. And it can come from attorneys, especially estate attorneys. Probate deals have been the best deals I've ever gotten on all different levels, land, commercial, residential, the whole gamut. So, estate attorneys, accountants, just people in the community that just know what you do. If you're a real estate agent, the last thing you want to be is a secret agent. If you're an investor, you need to let everybody know what you're doing and what you're looking for. And you do that in a number of ways, obviously promoting your brand and your business. I mean, it's all about brand. It's all about marketing. And it's all about, those relationships and staying in touch with people on a regular basis and, checking in with them, seeing how they're doing so that you're top of mind with them,
Right.
letting them know what you're looking for. But yeah, it's real estate agents, other investors, other builders and developers, just pretty much everybody, architects, engineers, those are great people to find land deals for. One of the best deals I ever got was an engineer who was working on a piece of land for a developer. The guy didn't pay him. So he gave him the land in exchange for his fees. And he called me up, said, hey, you want to buy a piece of land? We're almost done with the entitlements. And, so they can come from anywhere and everywhere.
Awesome. Hey, Taj, did you want to ask you a question?
Yeah, I was going to ask Craig, when you are identifying parcels, do you go after, do you look at anything specific like sewer lines or like the future land use map? Like, how are you targeting kind of what parcels you're going after? Or are you just kind of blanking in the whole area?
Yeah. So in my markets, I hit, I would sort everything by unimproved property. There's also covered land plays. So that's a little bit different, but yeah, pretty much I would market every undeveloped piece of property in my market, everything. I don't care who owned it. I would just send it out, even if it was other builders. Because again, if they decided not to build or whatever, you just never know what a deal might turn up or where a deal might turn up. So that's one way. Another way is just driving around. I just know my markets and I'm driving around. You just kind of, sometimes they just jump out at you that, I didn't see it before, but I noticed it. That's where like covered land plays, meaning if there's a property that has something built on it already, could be anything, could be a building, could be a parking lot, could be a dilapidated structure. And you have a vision for something else that could be on that property. I'll just stop, literally pull over, and I'll pull the, phone number up for the owner and I'll call them, because right now you can look anybody's phone number up generally by the property address in True People. There's other other stuff out there, but True People, like the truepeople.com. It's a free tool where if you, go in the tax database, you can pull that up, generally on your phone anywhere, look up the, information of the owner and their address. You can do a reverse address search in True People, and it'll pull up a bunch of phone numbers, and I'll just sit there and call them. Hey, this is Greg. I'm a builder developer in the area. Calling about your property on Main Street. If you're interested in selling, please give me a call. And then, my number, and I'll call every single phone number and leave them a message. And those things always, turn up something. Maybe Chat GPT can help with that nowadays. You can just type in the address and Chat GPT and say, give me the phone number. I haven't tried it yet, but it might work.
Cool. Taj, do you have any follow-up questions on that?
No, not anything right now. I'm pretty sure as you guys continue talking, I'll have something else. We're actually doing a covered land play here in downtown Raleigh. It was like a bar that we rezoned to a 40 unit, a 40-story basically building that can be put there. And we're actually under contract with Trammell Crow to sell it. So it's kind of like right in line to what you're saying. So
yeah.
I'm learning about a lot of the stuff that you're talking about. I want to kind of use those skills to do some deals on my own.
So Greg, I want to pick your brain on, like, with the this increase in interest rate, like, where do you see the market going? Like, is that something as investors we should worry about? I mean, it's like the interest rate is hovering around 7%. So that like directly affects the real estate investors, like especially the residential real estate investors. And we did notice a dip in the market like November, December. I think it kind of like last couple of months it's gone up, but I'm curious kind of what do you have to, what are your thoughts on that? Where do you see the market going this year and like next couple of years?
Well, I'm looking at everybody on this thing, and I think probably all of you have never seen rates higher than they are now. When I started in the business, rates were 9 and 10%. So there's deals done at every rate level in every economic environment. In 2009, I went through 2009. I had $40 million worth of property in 2009 when the bottom fell out. And in construction loans, and I was paying 9%, 9.5% interest on all of those. I had hundreds of thousands of dollars a month going out in interest payments alone, and I could not sell and I could not refinance. So I had to work all those deals out with the banks, and I did. I had money and I had, all that, so I was good. But I've been through it and I've seen it. There's always deals to be done in every market. Here's the key. You need to know the top. It's more important to know the top than the bottom. You've got to know where the top was. And the top was, December of 2021. That was the peak of the market. That was the top. And we've had a little flutters here and there, but, we are in a rising rate environment. Inflation is a problem. So here's the key. The Fed is going to tell you when the all clear signal is when you get that green flag and it's time to go. And that's going to be when inflation is back down near their 2% target. So they're getting ready to raise rates again. They might go 50 basis points. That puts pressure on banks and credit. And then the 10-year responds accordingly, which drives mortgage rates. So, we're going to continue to see pressure in the real estate market because of the levels that the property, went to, those distorted levels we saw over the last 2 years. That's not normal. That's not ordinary. And you may not ever see that again. So you just need to understand that, and you need to lead the market down. So you just need to make sure that the deals work with today's interest rates. And you got to use interest rates as the benchmark for what an investor can do with that property, whether it's cash flow, whether it's a flip, whatever it is. And, that's why the housing market has so much pressure on it right now, because people that refinanced and, 3%, 2.5%, 3% mortgages, it doesn't make sense for them to sell right now. There's no inventory, values have gone down, and they'll never get another mortgage rate like that again, probably. And I'm not going to say never, you just never know what could happen. But, right now rates are still rising. The economy is still in a bad spot because of inflation. And until inflation is under control, and I'm talking about, food, housing, cars, all of the things that matter to all of us that are on this call right now and things that we spend every day. I haven't seen a thing come down. It seems like everything is still going up. And, gas is getting ready to go up again. And, the Fed is recognizing that, today Powell spoke and he's recognizing that they're going to have to raise rates higher, faster, and stay there longer to get, this thing in check. And, this is kind of all new territory. So nobody really knows. But, all I know is you just have to reprice based on today's rates, and you have to hold your guns because, at the end of the day, it's all about, finance. The way a deal happens, it's the cost of the capital, the availability of the capital, and, that end buyer. What can they do with the property, and can they get some appreciation going forward? So in a bull market, in housing or whatever, you want to lead that market up. So if you sold for 200 yesterday and you're in a bull market, sell for 225 today, then 250, then 275 till you reach pushback. Now we're in a declining market. So if you bought for 300 yesterday, now you're offering 250. Then, then you're going to offer 200. Then it's going to be, 175. So you just need to pay attention to the market, see where the demand is, and lead that market, whether it's going up or down. And, there's still pockets that are getting multiple offers and stuff is selling in days. There are still that happening. So you need to understand where is that happening in your market, and you need to be ahead of those deals. And then, in the commercial sector, housing is huge. So builders are going to be still be looking for land because they can reset and price accordingly because construction costs have come down a little bit. So once they work through their inventory and get it off the books, they've got to keep the machine moving. They're public companies trying to stay employed. So they want to keep inventory going. So they're going to be looking for land to build on. There's rent demand everywhere. So multifamily builders are still building. And, commercial is the biggest area where, that's kind of the trickiest component right now, where there's, more oversupply than any other sector. So, hopefully that answers it. But right now, higher rates for longer. It's going to continue to keep pressure on the housing market. Just be smart and understand what the pricing should be based on current rates, and expect the rates to continue to go higher.
So would you, let's say if I was looking to buy a property, would you price it at the interest rate right now? Let's say at 6.5%, for example, on 30-year fix that somebody's able to get, or would you anticipate the interest rate going up and price it based on that? Because if you're going to be selling a property in 3, 4, 6 months from now, the interest rate might be higher. How would you price that asset?
Yeah, so you have to expect the rate to go higher, in the short term, but it could potentially come down and reset in the long term. So, 3 to 5 years, we could be looking at interest rates coming back down, and they're going to bounce, percentage here or there. Mortgage rates 6 to 7%, maybe we'll get up to 9. Who knows? In order to correct the housing market, you need 9, 10% in mortgage rates. I mean, that's where it's got to be to bring the housing market to a halt, to really correct prices, because prices are way out of proportion to where they need to be, and that's why the market is so imbalanced. But yeah, you need to plan on a higher rate 3 to 6 months from now, 1 year from now. 3 to 5 years, you can expect rates to get to come down a little bit.
I'm curious. You mentioned like the interest rate could, for it to get to 9 to 10% before the housing market comes to. Do you see us getting to that point this year? I mean, that like just the thought of interest rate going to 9, 10%. I mean, that would freak out a lot of people. I'm curious, like if you see that, and how could an investor start preparing for that if that were to happen?
Well, I mean, that's not like imminent, but we're close. We've gone from 2 to 7, 2.5 to 7. So to go from 7 to 10, that's a lot less real estate to close than going from 2 to 7. So, you can't really plan for it because it hasn't happened. You just got to understand your strategy. So if you're assigning, in wholesaling, then who's your end buyer? What are they willing to pay? And keep it simple. If you're going to flip, if you're going to buy a property, renovate it and flip it, then you need to know how long is that going to take me? And then, yes, you need to plan for rates are going up. That means the value of what I can sell this for is going to be less a year from now as rates go up than right now. So you have to buy for less. So that's kind of how you have to factor that. And there's another strategy I'm going to share with you here that'll mitigate all that in a minute. But so that's your short term. And then if you're longer term, flipping, maybe it's a year out, you still have to expect rates to go up, but who knows? Nobody knows where the rates are going to be. So you want to make sure you've got multiple exit strategies that you can either rent, owner finance, lease option, so you've got multiple exits in case rates do go up and nobody can buy the property. So you want to make sure that you're not in a hard money loan that you can't afford if you can't sell. That's how you get under pressure, and that's how bad things happen. And then if you're long-term and you're renting, income producing property, and you're renting it out, you can pay whatever you want as long as the property covers the debt service and returns. If you have to put a down payment, what you're looking for on that down payment, whatever you want to make, if it's 10%, 5%, whatever you want to make on your money, you need to make sure that it can pay the debt service, all the income, you've got a little bit for reserves, and it returns on that, down payment, whether you're borrowing it or using your own money, to satisfy that requirement. And, then you got to understand that you probably won't be able to refinance in the near term because values are going to continue to go down, rates are going to go up. So you're not going to pull your equity out anytime soon. So you may have to look at a 3 to 5 year period if you're looking at rental properties, BRRRR strategy, that kind of thing.
Got it. That's incredible. Yeah. Go ahead.
Greg, I was going to ask, I guess when you were getting started in doing the entitlement and rezoning process, because that can take so long and be so cost effective, when dealing with like civil engineers and getting site plans approved to try to, assign it to a builder.
You mean expensive, not cost effective?
Well, yeah, I'm sorry. Yeah, expensive. Really, yeah, really expensive. Were you usually like just paying everything yourself? Were you partnering with the developer to, kind of front some of that money, or how was you structuring it when you were doing those transactions?
Yeah. So for me, I was the developer. I am a developer. So I always went into every project like I'm going to take it through the vertical. And the only time I would sell it would be if somebody would make me an offer that was just, so good, it just didn't make sense for me to go through with it. So I used my own money for most of my deals. So I did about 250 million, worth of projects with my own money. My own, own signing on the bank myself, using my own cash, because I had businesses, so I was generating a lot of cash. So, I wasn't in the markets at the time, not until the bottom of 2009. That's the first time I went in the markets. So I was putting my cash to work. So anytime I made money, I got rid of it. I put it out there. I'd buy land, I'd use it for the entitlements. By the way, you never want to take land down unless it's fully entitled and permitted. So the only land I would ever buy was that, I knew I could build something on it that would, mitigate whatever it is that I'm paying for. But when you're doing entitlement work, you never ever want to close on a piece of land until you get all your permits and all your entitlements, and you want to control it with no money until you get that, or very little money. But yeah, paying the architects, engineers, and all that, as it could be hundreds of thousands of dollars for one little hotel pad or one little apartment pad. Even a house can cost you, $10,000 nowadays for plans and permits and all that kind of stuff, or 20,000, depending on where you're building. So, that was me just using my own cash flow. If you don't have the cash, you raise that from private investors, or you make the landowner a partner and you say, look, here's my plan. I'm going to take this through the entitlement process and then sell it to a developer. I'll pay you a premium when it sells. So you make the landowner your partner and they give you control of the land. And, you can leverage that, to bring on other investors, to do the entitlement, but you don't ever have to pay for the land. So you can get the, landowners in, as a partner. If you want to do the development, that brings equity to the table, or you can borrow against the land if they own it outright and get a bank, to give you a line of credit to take it through the entitlement process, or bring an investor in if they want security and give them a lien on the property, or you just get a private investor and you just give them a return. So that's several ways you can do that.
Gotcha. Okay.
Cool. Anybody else has any questions for Greg?
So by the way, if you're flipping houses and, you're having trouble finding deals that make sense, and let's say it's a decent house, but it needs some work and, it won't sell unless the work, has been put into it, but it doesn't make sense for you to buy it, put the work into it because of the total cost of everything and the interest. So what you can do with the seller is work out a deal to where they let you renovate the house, do the improvements, and then, you sell it. If you're a realtor, this works really good because you can get the listing and everything. But if not, you're just an investor and you have a realtor. So you do a contract to where you put up the improvement money. They, guarantee you in writing that, the house will be sold once it's, finished. You get your money back for the improvements and you get the profit. And then they get whatever they're looking for the house. So if they want 300 grand, takes 25 to fix it, might be worth 350. That doesn't make sense for you to go borrow money and do that. But, if they just let you put up the 25 grand to repair, the property, which you can borrow from a private, lender or whatever you want to do, then you put the 25 grand into it, you sell it for 350, they get paid 300, you get your 25 back plus 25 in profit. So that's a way you can make deals work that there's not much margin in, and it doesn't make sense for you to borrow the money and use a, hard money or private lender on, a house that doesn't have enough in it.
So essentially having the owner finance,
especially if you're a realtor.
So you're having essentially owner finance the deal, the purchase price and other costs for the property.
Well, not really. They're just, so you're putting up improvement money. They're agreeing to sell the house. So you put a lien on the property to, secure your interest, and you have a contract to where they have to sell the house when you're done. If they don't, they turn the property over to you. So that, you need to make sure you got a lawyer that puts all that in writing. It's almost like a novation kind of thing. Right. But it's not owner finance. You're not paying anything for the house. You're just putting up repair money. You have a guaranteed contract that they're going to sell that house when it's done. You put a lien on the property to cover, what you put into it, although it's going to be a second lien unless they own it outright. But if they don't sell, if they change their mind, then that'll trigger, a repossession where you actually can take over title of the house and sell it.
But then would you have to foreclose on the house and go through that process in that case?
So the agreement will negate that. That's like that novation thing where they just turn over title. So you would do a subject to at that point because there may be a loan. So they would deed you the house subject to, and then you sell it, which is another way you could do this all together. If you don't want to take that risk that they may not sell and you have to deal with a legal battle, because you can have all the best contracts in the world, they can still hang you up by taking you to court and fighting it. And if you are deemed predatory and you didn't fully explain it and they didn't have an attorney and they didn't understand it, they could hang you up for a while. As long as you get an attorney to do all this for you and they have an attorney representing them, just like any real estate transaction, that negates, and mitigates a lot of that risk. But the other way to do it is get a subject to, they deed you the house subject to, loan stays in place, you renovate it, you sell it, the house gets paid off when it sells, you get the rest of the money.
Yeah, Claire asked, that's what a novation deal. So yeah, that's clear. That's what it is.
Yeah.
Cool. Awesome. Hey, Greg, I know you are in time. So if somebody wants to connect with you and learn a little bit more about kind of what you do, you've shared incredible information. What's the best way to get in touch with you? And if somebody has any questions or, they want to possibly work with you.
Yeah, gregdickerson.com. All my info is there on my website. I also have a YouTube channel with playlists, covering all the different things, residential, commercial, multifamily, mindset, leadership, buying businesses. That's something we didn't even talk about. How do you buy a business doing all the same stuff that we talked about? Because everything you can do with real estate, you can do with a business, but even faster and easier now. And you can get owner financing way better, 100% in businesses than you can real estate. So that's a whole nother strategy. But all my courses, coaching, all that is on my website, gregdickerson.com, and then YouTube channel.
Yeah, and guys, we'll send all this information out in an email with a link to Greg's website. Any last question for Greg before he hops off the call?
Hi, I have a question for you, Greg. You said you lived in the you live in the Outer Banks now?
No, I did. I'm just
Oh,
visiting.
okay. Oh, okay. Because I was wondering if you've seen or seen any changes in the market out there. I know back in 2008, 2009, it was one of the first markets that was hit pretty dramatically with price
Well,
reductions.
Any resort market was. So the high end, whenever you have a recession and you have a real estate crash, the high end always starts first. So the first places you see it are builders. So builders, are always ahead of the market. They always know what's coming first and foremost, but they're also the ones that can sell for the least amount the fastest, because they're just going to reduce inventory and they can take a hit. So builders are generally first to fall, then your high end market, luxury real estate market, and your coastal resort markets, well, not just coastal, but your resort markets. They'll take the hit next because those are cash flow markets. And it's all, again, based on the cost of the capital and the availability of the capital. So we had both of those hit in 2009. Debt got more expensive and you couldn't get it. The only thing that's happening now is just more expensive. You can get it. You can still get it. A little bit tougher, and a little bit more stringent underwriting standards. But, that's what drove the market back then. Low interest rates, what drove it, this time. But, to answer your question, short-term rentals are under pressure across the country because everybody was jumping into it during the pandemic and a lot of people were using them. So, when you take and turn any property on any street and anywhere in America that's got no other reason for people to visit into an Airbnb, and it did well in the pandemic, that property is not doing well right now. But coastal properties are still in big demand because, people take that beach vacation in the summer no matter what. Even in 2009, this is the interesting thing. In 2009, the biggest recession we ever saw in the history of this country, besides the Great Depression, people still took that summer vacation. We saw the rents drop maybe 10%, occupancy maybe 10%, and it's been uphill ever since. It was uphill to that point, dropped 10%, been uphill ever since. So, the resort rental market and the mountain rental market, in ski season, those are always going to do well in those seasons, no matter what the economy's doing, because people will cut back in other areas and they'll take that vacation. That's that worker mindset. I work hard all year. I'm taking that vacation. I don't care. And if the economy's crashing, this may be my last chance. So that's kind of the mindset, and it was really interesting going through that and witnessing that. And I owned a bunch of big properties. What we did see was trading down. So the big oceanfront beach houses that were renting for 10 or 20,000 a week, people would, they would give that up and trade back and be one row off the beach and pay a little bit less for the same size house. So we saw a little bit of that happening. Short-term rentals are still doing really well in the markets that were built for short-term rentals with the types of properties that people want. So those are still doing really well in a lot of areas, but vacancies are up across the country and, rents are down across the country on average in the short-term rental market.
Right. And Michael has a question, Greg. What are your favorite markets and any markets you would stay away from right now?
So, that's a broad question. Depends on what, asset you're looking at. But right now in residential and housing, and you can go on realtor.com. They have tons of information on this. Obviously Arizona, Las Vegas, those are correcting right now the fastest. Those are under pressure, residential market, somewhat multifamily too, but mostly residential. Austin, Texas is taking the biggest hits. There's a couple other states that are really under pressure right now where values are dropping the most. And then of course, Florida is still one of the top states. There's more people moving in than any other state. Texas is still really hot. Austin is the one that's under pressure right now, but most other areas of Texas is still really hot. So it really just depends on what you're looking for. But I like the Sunbelt states because that's where the general, massive migration is going to. And then of course, Arizona, Nevada, those areas, New Mexico, a lot of people are still moving to those areas, but they got a little overbuilt out there and, those values are dropping pretty quick.
All right, Greg, thank you so much for the incredible information. It's been really, really good. Thank you for answering all the questions, and I'll share your information. I'll send it out to our email list with, and then, they'll just connect you from there. Okay.
Awesome. Hey, thank you for having me. I enjoyed it. Great questions.
Yeah. Thank you, Greg. Thanks. Have a good one.
Take care.
Cool. Thank you. All right, guys. Thank you so much. So we are going to be bringing in some guests for like a couple of weeks, and then I'll do a solo call. Any thoughts or feedback on the calls with guests? I mean, Greg provided some incredible information. Any expert that you particularly would like to see on the call come in, and then anything specific, then let us know. We'll make sure we, bring somebody on to you that can answer some, specific questions you have, whether it's related to marketing, list pulling, selling, or, negotiating, or whatever that might be. let us know. But I'm really enjoying these calls, and hopefully you guys are also getting a lot of value from these. Any other questions you guys have? Oh, yeah, Phil, I'm glad you enjoyed it. I mean, it's not necessarily a podcast format. So Greg said my first time making one of these. Great info is their podcast format. We're also launching our own podcast. So if you guys are interested in being a guest on that podcast, please send an email to support@breezesimply.com and we'll get you on the podcast. But these people that we're bringing on the mastermind call are just for the purpose of, like, we make it clear anybody that we bring on, we want to make sure we're leading with value, as much value as they can provide. So any questions you have, they can answer. And then if you have any specific questions, then you can reach out to them. And if you need to, work directly with them. But, I thought the information that we had today and last week with Brian was incredible. And then we have other guests lined up for next couple of months. So, but if you guys have any specific, expert that you would like for us to bring on these calls, definitely let us know, and we'll make sure we make it happen and get somebody on the call to answer any questions you have. All right. Thank you so much, guys. Have a wonderful rest of the week, and I'll see you guys on the next week call. Thanks.